Since we're talking about jobs and we're talking about money, we know 2020 was a rough year for so many people. And there might be some final insults up the sleeve, especially when it comes to tax season. Because if you are used to getting the big refund check, well, you might get a wake-up call instead. Here to explain why and what else you need to do to keep in mind and keep that money in your pocket is attorney, author, tax expert Toby Mathis. Good to see you this morning, Toby. Good morning.
Hey, good morning, Steve.
So, a lot of people, it's been a tough year. Service industries in particular have seen a lot of people who have been trying to collect the unemployment instead of the tips. But the big question is, when it comes to the tax refund this year, are you going to get it or not?
Yeah, so a lot of people are under the impression that when you receive unemployment, that it is not taxable. And unfortunately, that is not the case. It's actually still income. And injury to insult is in many states, the state will even tax it. So you'll pay your federal taxes and your state taxes on it. The only reprieve is that you don't have to pay Social Security taxes on it. So you don't pay that old age, disability, and survivor's insurance or Medicare, but that adds another aspect to it where then you can't use that to contribute to your IRA or to your retirement.
So
it oftentimes catches people.
Yeah, I was just trying to recap everything, Toby, and simplify it a little bit. So basically what you're saying is that if you collected unemployment in 2020, you're going to get taxed on that just as if it was your paycheck that you would have been receiving before, except for the not paying the Social Security tax. But that's a small percentage compared to your federal tax and in some cases state tax levels. Virginia, Maryland, D.C., do you have to pay state tax on unemployment?
Yes, you do. Yeah, Virginia does not. D.C. does. Maryland does. Most of the states. There's a few. I think California, Montana, New Jersey, Oregon, Pennsylvania, Virginia do not. And then if your state is a state that does not have state taxes, so folks that live in Alaska, Florida, Nevada, South Dakota, Texas, Washington, and Wyoming, they're good. But everybody else gets to pay both.
So if you're now, say you worked through March, April of 2020, and then you got unemployment after that, you're going to get taxed on all of it. Your income for the first few months, you're going to get taxed on your unemployment. For the future, because it doesn't sound like you're going to get much of a refund there, perhaps. For the future, can you have taxes withheld from unemployment when you file? Is that something that you would recommend that you do?
Yeah, I would absolutely recommend if you're if you know you're going to be paying the tax anyway, and you're not somebody who's going to put it aside, then absolutely have withholding taken out of your unemployment. And you do have that choice. You'd fill out I believe it's the W-9, and you would do it just like anybody else. And that's really a personal decision. Some people know how to plan for their taxes, don't want the refund. They want to get as close to zero as possible. They don't want to give an interest-free loan to the government. And those people may put a little bit aside in a savings account earmarked for paying their taxes when it comes time.
Last thing for you, Toby, for those who just didn't have a good year, didn't have much of an income at all, whether it be from unemployment or anything else, what is the threshold? What would be the standard deduction for 2020 as to whether or not you might even have to file your taxes?
$12,400 for a single person, $24,800 for a married couple.
All right. So that is something certainly to keep in mind. But the headline is for those who were collecting unemployment all year and then perhaps hoping for that big tax refund, it might not happen. Just keep in mind, you are being taxed on the unemployment. Toby, thanks for joining us this morning. Happy New Year to you.